If you've been keeping an eye on the stock market lately, you've probably noticed one name that just keeps popping up: Opendoor. Now, this stock has been through it all. Massive rallies, brutal sell-offs, wild speculation, you name it. But lately, something different is happening. There's a quiet buildup, a sense that maybe, just maybe, the market's getting ready for a move. So the big question is Opendoor about to make a real comeback, or are we just seeing another head fake before the next drop? Because what we're seeing right now in the data, in the charts, and even behind the scenes could be setting up one of the most interesting weeks we've seen for Opendoor all year. Before we dive deep, make sure to hit that like button and subscribe, because this video will give you everything you need to understand what's driving the stock, what the latest numbers mean, and what to look for as earnings approach. And real quick, this video is for educational and informational purposes only. It's not financial advice. Always do your own research before investing. All right, let's break it down. So, Opendoor finished the day down roughly 2.3%, closing around $7.59 per share. It traded between $7.39 and $7.76, with about 87 million shares traded throughout the day. That's actually solid volume, considering how uncertain the overall market's been lately. Now, the market itself? Kind of a roller coaster. We started off with some optimism. News about progress between the U.S. and China gave traders a little hope that tensions might cool down. But then, a few hours later, things flipped again. Reports came out that the U.S. is considering blocking China's access to NVIDIA's most advanced semiconductor chips. And that right there, that kind of geopolitical tug-of-war, instantly made investors nervous. Whenever that happens, risk appetite drops, tech stocks start to wobble, and momentum stocks like Opendoor tend to feel the pressure. But here's the interesting part. Opendoor didn't break down like it usually does. It held up far better than expected. And that says something. Let's zoom out a little. Over the past several weeks, we've been seeing subtle changes in the overall market tone. There's been more talk about inflation cooling, potential rate cuts next year, and even early signs of stabilization in housing data. Combine that with Opendoor's steady performance, and it feels like investors are quietly positioning themselves ahead of earnings. But before we talk earnings, let's mention something that's not getting enough attention: the consumer credit situation. Over the weekend, one of the subprime auto lenders announced it's stopping new loans altogether. That's not directly tied to Opendoor, but it's a red flag for consumer health. When credit starts tightening, it usually means buyers are pulling back, and that can slow real estate transactions. Fed Chair Jerome Powell even hinted recently that consumers are showing early signs of fatigue: less spending, more reliance on debt, and slower loan growth. All that trickles down into the housing sector. And yet, despite these headwinds, Opendoor is holding strong. That strength could be signaling something bigger, maybe optimism heading into their next earnings report, which is scheduled for November 6th after market close. Analysts haven't made any significant changes to their targets or estimates lately. No new analyst ratings, no big SEC filings, and no recent insider activity. It's all quiet, and when things go quiet before earnings, it usually means investors are just waiting for that next move. Now, let's talk about a rumor that's been floating around: a possible partnership between Robinhood and Opendoor. Robinhood recently announced a collaboration with Sage Home Loans, and immediately people started connecting the dots, saying Opendoor could be next. It makes sense on paper. Opendoor already offers home loans and mortgage services, and Robinhood is expanding into tokenized real estate. But here's my honest take. It's an exciting idea, but not a game changer, at least not yet. Robinhood still needs more regulatory approvals before diving deep into tokenization. Once that's in place, then sure, a partnership could be massive, but right now, it's more of a watch this space type of story. Speaking of speculation, let's get into short interest. About 21.9% of Opendoor's float is currently shorted. That's roughly 156 million shares. The average cost to borrow sits near 1.2%. The short interest score is around 66, meaning shorts are active, but not in panic mode. Essentially, they're waiting. If Opendoor disappoints, they'll double down. If it surprises, they'll run for cover. What's fascinating is how balanced the positioning feels right now. The bulls are cautiously optimistic. The bears think the rally's overdone. And that tension is exactly what creates the setup for a big move. Looking closer at the data, Opendoor's management seems quietly confident. Over the last few weeks, they've dropped subtle hints, interviews, social posts, and a few Easter eggs pointing towards something interesting this quarter. Companies usually don't do that unless they feel good about what's coming. The key this time won't just be earnings numbers, it'll be forward guidance. With the CEO transition still fresh, the market's looking for direction. If Opendoor can show improving margins, better transaction volume, or stronger cash flow outlook, that could change the story entirely. Now, let's talk about what the options market is telling us. There's about $10 million in calls and $2.6 million in puts open right now. That implies an expected move of roughly 11.8%, or about a $1 swing in either direction post-earnings. But here's the interesting part. Volatility is cooling down. Traders aren't as nervous as they were last quarter, which could mean confidence is building quietly behind the scenes. Technically speaking, Opendoor's chart is at a really interesting point. It's currently sitting right between its 10-day and 50-day moving averages, and those two lines are starting to pinch together. When that happens, it often leads to a breakout. The question is, which direction? Resistance is sitting around 7.90 cents, and breaking above that could push the stock back toward 10. On the downside, you've got solid support around 6.50 and another layer near 5.75. If it dips that low, you'll likely see dip buyers stepping in, just like they did earlier this year when the stock bounced from the 460 range. The stochastic RSI is at 58, which is right in the neutral zone, not overbought, not oversold. In simple terms, it's waiting for a catalyst. And that catalyst is earnings. What's also worth noting is that even on red market days, Opendoor has seen a lot more buying interest lately. That's not something you see when investors are scared. That's something you see when people are quietly building positions. Meanwhile, in after-hours trading, Palantir and Hims & Hers just released their reports. Both came in mostly neutral to slightly positive. That could actually help sentiment for speculative names like Opendoor because it suggests investors are still willing to take on some growth risk. So here's the bottom line. Opendoor's setup right now is one of the most balanced we've seen in a while. Shorts are waiting, bulls are cautious but hopeful, and the chart is sitting right at a technical pivot. All that adds up to one thing: earnings weak volatility. If the company posts strong numbers and gives bullish guidance, we could easily see momentum pick up and push the stock back toward $9 or even $10 in the short term. But if the numbers disappoint or guidance is weak, a slide back into the mid-$6 range wouldn't be surprising. What stands out most is that the stock is showing resilience. It's holding steady even when broader markets wobble. That's a sign of confidence, and confidence often builds ahead of big announcements. So, whether you're bullish, bearish, or just watching from the sidelines, this upcoming report is worth paying attention to, because how Opendoor performs this week could tell us not only where the company's headed next, but maybe where the housing tech sector as a whole is going into 2026. If you found this breakdown helpful, make sure to hit that like button, subscribe to the channel, and drop your thoughts below. Do you think Opendoor's gearing up for a breakout, or are we about to see another sell-off after earnings? Thanks for watching, stay sharp, and I'll see you in the next one.